Greetings, it's Dr. Jeffrey Scott, and this is my Market MRI Pro update for Thursday, April 10th, 2025. Well, unfortunately, despite our attempts at defining a new thing, making markets great again, there is no follow through on the Trump tariff pause rally. Now, it wasn't really as bad as it felt. It didn't take out any lows, but even the futures going into Friday are showing some concerns. Again, my name is Jeffrey Scott, and my email address is marketmripro@gmail.com or hgsidoc@gmail.com. If you're new to my channel, please hit subscribe and the alarm. If you like what I'm doing, hit the thumbs up, and even better, join my top-down trader group, which I'll talk about momentarily. As always, these programs are for educational purposes only. Any recommendations should be taken in the spirit of education and not considered investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention in the report. Trading stocks and options should be considered risky and should always consult with your financial advisor before making trades. And I have tools in multiple platforms. I am independent, and I am mostly doing these videos now in my Market MRI Pro tool. I've got some updates. The Orange County meeting is filling up June 6th through 8th, Residence Inn and Suites, Tustin, Orange County. I will talk with Greg soon and talk about whether or not we open up an online option. There's pros and cons. The revenue is great because it defrays some of our uncovered costs, which is a wonderful thing, but it also has a technology layer, which I don't like to let the technology interrupt what I'm doing in the room. And from my perspective, it's that in the room experience that I'm going to be focused on maintaining. That said, I certainly recognize that not everybody can make it live, and we've got some really exciting, really impressive speakers that will be joining us. I can talk about that a little bit right now. One of my good friends here in South Florida, John Person, has agreed to present via Zoom. He is an incredible guy, great golfer, but that's not why he's coming to talk to us. He has invented his own trading signals, his own platform. He trades professionally, manages people's money. And what I like about him is he's got a great sense of humor. He's a great teacher. And he's been doing this for as long as I have, even at one point owned his own futures brokerage. Second speaker will be Chris White, who is the proprietor of EdgeRater. He's got some great new things to talk about, and look forward to hearing from him. I will be speaking, of course. Dev, who those who have attended before, will be speaking. And then today I got a verbal commitment from Matt Caruso from Caruso Insights, who is at least the first response was sure they can talk via Zoom. CarusoInsights.com if you want to, CarusoInsights if you want more information. I think that gives us an amazing cast, and I'm not saying that about me. They've got other people, and I think it'll be a great meeting. Love to have you. And once we fill up, we'll make a decision on the online. I mentioned my top-down trading group. It's a Google group called Top Down Trader. It's free. I actually give you discounts on my tools if you sign up. I post some of these things on YouTube. I always post them in the channel. Please consider joining. It's not for solicitation. And then just to remind us all, we're not done yet. Friday is the PPI. Now, the CPI came in a little soft. And maybe it doesn't matter, just like the employment didn't matter because it's pre-tariff land. And we'll see what the PPI shows. I think the market's still spooked about tariffs. They're spooked about Mexico and Canada where a number of things are still at 25%. They're spooked about China and the escalation there. But there were some otherwise good news of different countries wanting to negotiate. So it ain't over yet. And then the other piece to point out is lots of interesting earnings, including JP Morgan, BlackRock, Wells Fargo, BNY, Morgan Stanley, and Fastenal, so industrial and banks, investment managers. So it's actually, to me, it's the official beginning of the next quarters of earnings announcements. Let's go take a look at charts. That's what we're here for. So we're going to use, again, Market MRI Pro. This is my favorite page for watching during the day. The data essentially is real time. We don't stream it, but if you hit the refresh before, you can start to look at updates. You could see in the market on Thursday, diamonds were down the least at 2.5. Russell was down 4.2, Q's 4.26, Spiders 4.38, and the VIX was up another 16%. So it was not a good day by any means. Interestingly, when you look at where it finished in the upper half of its range. It was down much lower. You'll see some bottoming or some tails on the bottom of each of those indices. And volatility finished in the middle of its range. Now, if you look at the new high, new lows, net here, they're still negative on both the NYSE and the NASDAQ at the various time frames, but they're getting smaller. That's a good sign. If we look at what happened in the markets from the open and look at the S&P sectors, all of them were negative, led to the downside by energy as oil, crude continues to fall. And then the leadership was interesting in that real estate, tech, one's kind of defensive, and one is as aggressive as you can get, were the leaders, but they were all down. From a theme perspective, not much was up. Gold and silver miners and cannabis, just not a good day for the markets. If you look at the S&P 1500, the NASDAQ, and the NYSE index, in the S&P 500, 1500 rather, no sectors were up. Only 10% of the industries were up and 9% of the stocks. That is the opposite of Wednesday when nearly 100% of the stocks were up. In the NASDAQ, 13% of sectors up, 15% of industries up, and only 19% of stocks. And again, much worse than it was yesterday when they much higher. On the NYSE, no sectors were up, 9% of industries were up, and only 13% of stocks. So odds are you had a lot of losses or negative stocks if you're still long these markets. If we look at what do we want to look at next? Let's go to the timing model. Here we have weekly charts. So we are in, and it's this bottom line that's buy, sell. We're still in a sell in the weeklies, no surprise. Notice that we have white candles on each of the major indices, which tells me we're still higher than where we opened. And so even though we set cycle lows going back to really the lowest in the cycle since the beginning of 2024, we still are above the lows. We've held those lows even with the entropy in the market on Tuesday and Thursday. The daily model certainly is not going to advance with what we saw, but I do want to point out that you've got tails on the bottom. So here is what I think it was at least a short-term bottom, if not the bottom. And our lows are going up even though the highs aren't really taking off. So we haven't broken down yet. And if you think about what my narrative is of my expectations, we're not going to go up in a straight line. If we look at the US index ETFs, let's just make that smaller, make sure we're on daily, and you could see that we have a trend line here, and for whatever reason, and I know Praveen watches this, didn't want to let me draw it on this one, but you could put that same trend line on the others as I did on the Russell, and my biggest concern is we don't get above that trend line. And even if we do, we have to get above the 200. So my best case scenario is we fail, we come down, retest, and go higher. And right now, the market is living that mantra. You can see in the markets on Thursday, we did spike the VIX again. It came down some at the close as the markets eased their losses or regained some of their losses at the end. And you could see the dollar dropped again um, and closing just off of its lows. If I look at commodities, if the dollar's weak, you'd expect commodities to be strong. And you can see gold sets a new high. Silver is working its way up, but being that it has industrial applications, not just precious metals, it's lagging. Um, Oil had a really bad session, really bad session. 3% drop, as did natural gas was also down. And we saw a little bit of easing, really not much easing um, on the 10-year. The 30-year actually traded up some in the markets, despite the soft CPI. If we look at the buckets, you'll see a reversion to where we were. Not as bad when we had 70 to 80% of some of these indexes below the Bollinger Bands. But you could see yesterday in the gray bar, we had a movement back to the left. And some of the gray showing here is because these had stocks in it. And as they moved to the left and got more oversold, these show the gray with the current bar being the colored bar. So the buckets don't show me anything significant. 18%, 15%, 23 and 16, not a signal, just shows the markets got weaker. If I look at the breadth, if I remember correctly, there was no new signal in the markets. We did have the DFib indicator, which really is the first time prospectively that I've seen it. I looked in the back and you saw that there could be double bottoms, but it signifies that we're probably beginning the bottoming process. Is this the bottom? We'll see. We had a Eureka as well yesterday, but obviously that didn't have any follow through. What else could I say? Volume was higher today on the NYSE. Here we've not yet got a signal yet. We're still off the recent lows on stocks above the 50 in white, the 200 in red, and the 17 in green, although they're clearly down in the pattern on both the NYSE and the NASDAQ composites. If we look at new high, new lows, advanced decliners, and up-down volume, still negative on all of them. But none of this is a new signal. Ratio charts to see what was moving in the market. And it's interesting, we're getting these spikes every once in a while, which I think is dirty data. But looking at it, you can see industrials held up okay in the markets. Communications probably held up okay. Technology, you can't see the red bar very well, but there's actually a red bar, came down some after a move up in the prior session. This was most things were down day, but it's weird. I don't see, if I look at XLP, it really wasn't spiking today. Utilities was not spiking today. Real estate was not spiking. Some of the things that are more likely to spike. It does look, again, like I've got some weird data with some of the spikes that we're seeing. Lastly, not that I'm really looking to go stocks, but we're still having an issue here with the sectors. We've got some garbage that picked up in them and some duplication. So we'll have to get that cleaned up. I know that that Praveen's been working on that. But if we look at, and I'm going to just ignore the ones that I know are wrong. If we look at performance, the only thing that's showing, and that doesn't even count because that's, I think the consumer cyclical or consumer defensive is the one that is the staples. So these four up at the top are all one stock issues. You could see the least down was consumer defensive, not a big surprise. Staples, if you look at the various industry groups in staples, you could see that apparel manufacturing, yeah, that's only one stock. Okay. Yeah, there's some challenges with the sector distribution, so I'm going to be careful about looking down the top down. The point is, in a typical market, I want to find the leading sectors, and then in those leading sectors, I want to look and see what the leading industry groups are, and then I want to go ahead and, for example, take the top, let's use the 2-day momentum, rank them, and let's just look at the top 5. 1, 2, 3, 4, 5. That built me a list of 102. Let's rank it the same way And so I've looked at the top performing industry groups, the top stocks, and there it is. Booking has been here for a while. If the markets are higher um, on Friday, you actually got an interesting story here. I did not want to do that, so let's kill that. Let's try that again. I said you have an interesting story because here is a great stock and it is sitting right at a trend line. And if we have a positive day and we take out that trend line, it's expensive, but bookings, which is in an uptrend over time, pull back to the support at the 50, looks like it's ready to go. AutoZone, another super expensive stock. Mealy, we've been watching all week, has pulled back. United Healthcare really benefiting, I think, from that news that we saw in Medicare Advantage. Another expensive stock, Automotive O'Reilly. Costco, Costco is holding up really well considering the market, and it's sitting right down on the 50, although it had a big move in the market on Thursday on great volume with a new CPR, a new breakout, new momentum signal, a green candle low, setting the lowest low, going back 10 bars and closing higher. Relative strength at OBV, Costco looks great. I don't want to go too far down because I don't want to give you the idea that I think you should be going out and buying a lot. Markets are, I think, still scary here, and I like to see a follow-through day before I get too excessive to the long side. If I go look at my impulse, we dropped 200 stocks today as we have a filter for $1 and 100,000 shares. But we can still look at just like I did, and I do every night. Let's put on a volume over 500, price over 5 filter and see it drops down to about 2,000. And then I might look at some of my favorite long signals if I wanted to go long. 2-day momentum up. Let's just look at these and see. AEM, beautiful stock, beautiful uptrend. Let's take a look at that's the weekly. Let's go back to the daily. Same thing, beautiful uptrend, pull back to the 50 and breaking out here. Excellent volume. This is hitting the scan because these two blue dots in a row here, which are 2 days of momentum. Great. AGI, Alamos Gold, beautiful. AU. Is this the time to say that all that glitters is gold? Here's Fortune Silver Mines. Again, the same signal, still hasn't cleared its prior high. Goldfields, another small gold stock that's moving. Harmony, Newmont, Osika, Orla. Then you have Price Smart, which it's not my kind of stock. Kind of loose, but if we look at it, tighten it up a bit here. It's uptrend, pull back, and a breakout. Now let's see about putting a trend line on it and connecting the high here. This high, you probably broke out. Again, it's not definitely the kind of too loosey-goosey for my taste. Then you have Royal Gold and Wheaton, precious metal. So let me summarize up my thoughts. One, markets are too turbulent for me to be putting a lot more money to work. Two, I did close some of my longs. Probably too early, but this is short-term trading when the market's this turbulent. I'm looking for a follow-through to put my cash to work. I'm going to try and avoid the little bull runs and bear pullbacks, which we're going to see. There's a reason why I look for a follow-through day because that gives me a little bit of conviction to go long. I'd still be careful. Again, this is not investment advice. It's just information and education. If I had to buy something, I bet you can figure out what would be glittery for me to buy, and that would be a gold stock. One of the ones we talked about last night, which I did take a position in, and added to my position, was KGC, Kinross, and it looks like all the other ones, except breaking out to a new high. The reason it didn't make my list here is it didn't have the two momentum dots in a row. So, sea of red, a lot of pain still in Wall Street, but there's always a silver lining. It turns out this time it's gold. Have a great night.